Well, hello and welcome to this Moneycontrol live stream. It's a Friday morning and we are awaiting a long weekend and you're watching Morning Trade with me, Nandita Khemka. Over the next 30 minutes, we'll be talking about the cues for trade. SGX Nifty is hinting at a start above that 18,000 mark, and we will also be discussing all the stocks that will be hogging the limelight in today's session after reporting earnings post-market yesterday. We'll also be getting all your stock-related queries answered by a technical expert on the show. So if you have any queries, don't forget to send them in to us on our YouTube feed and we will have them addressed. But before we do all that, let's take a look at the top headlines at this hour. The US economy grows at 1.1% in the first quarter, well below estimates. Wall Street, however, rallies led by the Nasdaq as Meta surges over 13%. Dow and S&P 500 also see their best day since March, while Amazon dips after hours post its cautious commentary on the cloud business. Asian markets trade largely higher ahead of the Bank of Japan's policy decision. The SGX Nifty, meanwhile, is hinting at a start above that 18,000 mark for the Nifty. Wipro delivers a fourth quarter numbers and guides for negative growth in first quarter of FY24, while the board approves a 12,000 crore rupee buyback. Tech Mahindra's deal wins slump while margins come in at a 23-quarter low, while Axis Bank delivers better than expected numbers despite higher provisions for the Citi acquisition. Fourth quarter numbers from Ultratech Cement to be closely tracked today after ACC's disappointing show in the quarter gone by. Realization likely to be flat on a weak pricing environment, even as margins could see an expansion. Well, we are now joined by Vinit Bolinjkar, who's the head of research at Ventura Securities, to discuss the market setup, the themes to watch out for, and of course, to discuss which stocks and sectors are looking attractive at the current juncture. Good morning, Vinit. Good to have you on the show. First of all, I want to get in your thoughts on where the markets are headed, given the fact that after, a slew of lackluster days of performance days, the markets have finally managed to edge up and have, clocked that 17,900 mark. And now we are knocking at that 18,000 mark. Where do you expect the markets to head in the coming months?
So I think we are on the verge of a very, very good run coming into the markets. We believe that, we've climbed the walls of worry, closing above the 18,000 levels of psychologically is very strong. Our growth factors are going to be very strong, and we believe that at the current valuations, markets are very benign, and we see substantial growth coming in, and we could expect a good markets moving and testing the previous highs of 18,600 in the near term.
Right. I also want to get in your thoughts on, the banking pack, given the kind of earnings that we've had from the likes of, Axis Bank most recently, then HDFC Bank, ICICI Bank. Profit growth has been pretty steady, even for Axis Bank, despite the fact that, it's the Citi acquisition costs that have led to losses, net profit, in fact, net losses in the quarter gone by. But operating profit has been pretty smooth. And I also want to get in your thought on Bajaj Finance, given the fact that it has reported a 30% jump in profit, but there are lingering concerns over its valuations and how it stacks up versus banks. So how would you view this entire banking pack and Bajaj Finance from the NBFC basket?
So in our pecking order for looking at the banking stocks is going to be ICICI Bank is our top pick. We like IndusInd Bank also came in with very good numbers. And HDFC Bank obviously is one of the most, giving the best returns in terms of upside over the next 2 years as per our internal assessment. So we like these three stocks. Bajaj Finance, we believe, is that, the growth is on a declining curve and the valuations are slightly on the steeper side. And hence, we believe that this growth will tend to moderate over a period of time. And hence, we believe that while the stock can still rally from here, we expect the stock to go around 7,000 levels. We believe that HDFC Bank, ICICI Bank, and IndusInd Bank offer better appreciation potential compared to Bajaj Finance.
All right, so that's the view on the entire financial space. Talking about the IT pack, we've seen the biggies like TCS and Infosys hand in a disappointing set of numbers, but it's a mid-cap IT pack that is doing exceedingly well. You know, you have the likes of Mastech, Science, they all handed in a good set of numbers, and the scales are clearly tilting towards the mid-cap IT space. Would you advise investors to look at some of these mid-cap IT names like Mastech, Science, Persistent Systems, or would you say that with a long-term perspective, one should actually look at large-cap IT still?
Our views at Ventura are very different from the market, and we believe that the IT sector is an underweight going ahead. We believe that the domestic story offers substantial security of earnings and upside potential rather than playing IT, because the exposure of Indian IT to the North American geography is very high, and there are 2-3 events that are playing out. One is we are seeing pricing pressure come in. Second is we are seeing a slowdown, so volumes can be uncertain. And third thing is, this entire de-dollarization has played out globally faster than most people expect. The US currency, which was at 56% of global reserves, is now below 44%. So we believe that the de-dollarization trend and the impending BRICS currency in August, is a potpourri of uncertainty over the next 2 quarters. So we are advising our clients to kind of take a pause on IT allocations and increase allocations to the domestic segment where, the growth is really very, very firing on all cylinders. We like the rural consumption theme. We believe that the capital goods theme is going to play out very well. And so we are advising our clients to stay away from IT, despite the fact that, select names in the mid-cap space have done well. We believe that there are several headwinds rather than tailwinds. So we would like to be a little underweight on IT at the moment.
Right, underweight on IT. You mentioned the rural consumption theme. Would you like to take some names, stocks that one should look at from this space?
So we like all the ethanol plays. We like Nestle. Nestle did a good play out there. We like all the rice stocks. Global demand for rice is only rising. Sugar prices are strong. So these are some of the plays that we like.
Right. So those are some of the plays that Ventura Securities is recommending. Well, with that, Vinit, thanks a lot for taking out time and joining us this morning and sharing your thoughts with us. Let's also get on board our technical expert for today. Raja Venkatraman of Neotrader is joining in. Good morning, Raja. Looks like 18,000 is on the cards as we look to start a fresh series this Friday.
Yeah. Good morning, Nanita. Yes, definitely. We are looking towards a very positive start, and SGX has already hinted there is going to be a gap up opening. But over the last few months, what I'm really wary about is the gap up opening. Because if the market shows a sustained rise during the day, I'm pretty much comfortable. But when a market induces a gap up opening, it also, takes away the participation enthusiasm. Why? The reason being that we are now going to open with almost 150 point gap up. And now if you are going to open, say, around 18,100, which is being shown on around 18,070, but that has been shown on the SGX. So we are already reducing the momentum. But then, having said that, dips should be a good opportunity to buy into. Now, if a gap gets created, that will be the new set of supports. Earlier set of supports was way down, around 17,200. So this could form a new set of supports. But then what I would be really looking forward to is Bank Nifty firing up. Because 43,000 was a very key level in Bank Nifty to watch out for. And if the overall scenario persists, the immediate target which I see in Bank Nifty is still 43,500. So the indices remain positive. So one should continue to participate on the positive side. And what I would always look for is look for a dip to buy into. So the dip in Nifty would be in the region of around 17,800 to 17,900. and the dip in Bank Nifty will be closer towards 42. This gap, I
Right.
will be a buyer on a pullback.
Right. Let's also, since you spoke about Bank Nifty, the stock of the day for me today is Axis Bank because it reported numbers last evening. It has swung to a loss, of course, on the back of the integration costs of Citi. But operationally, when you look at operating profits, those have jumped somewhere around 40% on a YY basis. And if you look at the brokerage call this morning, Jefferies has retained its buy rating on the stock with a target price of 1150 rupees a share. And it believes, in fact, it has raised EPS estimate on the stock by somewhere around 2 to 3% and sees a further scope of valuation re-rating. Given the fact that the performance has been stable aside of the one-off that we saw, do you expect some kind of an upside coming in on the counter today, or do you see some kind of weakness setting in because of the net loss figure that it has reported?
Yeah, considering the way the market is set to open, it will definitely not be a weak opening. Yes, the results have definitely not been encouraging. But what it will definitely do is it will spend more time in the range. So this would be not a good time to look into this stock because the stock has had challenges around 900 levels. So unless I get a clear closing above 900, I will not be a buyer in Axis Bank.
Right, so that's the call coming in on Axis Bank. We're getting some queries on Bajaj Finserv on our feed. You know, the company reported numbers yesterday. In fact, Bajaj Finance also reported and it saw steady 30% growth. And even though there was some bit of margin contraction, stock did pretty well in yesterday's session as well. But if you look at Bajaj Finserv, stock is up somewhere around 2.5% over the last 5 sessions, given the fact that even that has reported an okay set of numbers. What are the kind of levels you'll be watching out for on that one?
So when I'm looking at Bajaj Finserv, yes, they have come out with some numbers and they have spent a considerable time in a decline. So this is somewhat is a relief rally which we are looking at in both the Bajaj Fins. But then what I see is overhead resistance zones around 1410 levels. So I would wait. I would be a buyer in Bajaj Twins for say on intraday basis, but I would keep a close watch at around 1410 levels because there is a strong set of resistances out there. So once it crosses that, then the upward trajectory is towards 1550.
Right, so those are the levels to watch out for on Bajaj Finserv. Ashraf Ali had written in on with this query. I hope this answers your query, Ashraf. Let's also take up a query on Raymond. This one is coming in from Debu K and he wants to know your thoughts on this counter. Now, if you look at Raymond, over the last 1 month, it has surged over 50%. And yesterday, of course, there was news flow that, GCPL is acquiring its consumer care business for a little over 2,800 crore rupees. Would you expect more upside on the charts, or would you see some kind of a profit booking setting in after the kind of strong rally that it has seen in the last 1 month?
Yeah, if you observe the price action has been quite phenomenal. It's moved almost, you can say, 30% in just 3 weeks, which is not the way the market is moving. So it is quite possible that you can expect a profit booking here. What one should do is this counter has shown some phenomenal up move. It took some. It cooled off in between at the start of this year, and then it has once again showed some positive trajectory. So one can look to buy on a dip towards 1500. So I will be targeting 1500 levels to buy into the stock. The stock is definitely on a positive upward drive.
All right, look to buy into it around 1500 levels. Let's also shift focus and take up a query on Indian hotels. This one is coming in from Pooja Shah. The numbers are phenomenal. It has beaten estimates on all counts. It's the best ever full year performance for the company. Margins have also surged over 30% on a YOY basis. Would you expect a breakout on the charts for this one in today's session?
Yeah, so considering the way the stock has moved over the past so many weeks, the breakout was awaited, and one should definitely participate in the stock. It's a good portfolio stock. If you're having an outlook of holding the stock for the next 1 year, it is set to double from here.
All right, that's a bullish call coming in on Indian hotels. I also want to get in your thoughts on Laurus Labs. Numbers weren't good. Brokerages have cut EPS estimate by 24 to 25% after the poor show. And we have a query coming in on the counter as well from Abhilash, if I'm not mistaken. And he wants to know your thoughts on this counter. So, a lot of weakness expected on this counter now?
Yeah, see, this counter has not been able to recover ever since the last 1 year. Right, in the last 1 year, the decline has been quite prolific, and the accelerated decline began in August last year, and it's only been going downhill. And continued poor performance will only add to the selling pressure. So it's a good candidate to go short, but do not look for investing into this counter at the moment.
Right. Shifting focus to IT once again, because quite a few numbers have been trickling in over the week. Wipro yesterday announced earnings, missed estimates, but it's the buyback that was announced, 12,000 crore rupees at a 19% premium to current price. So that could, in fact, provide some cushion to stock price in today's session. But aside of that, Tech Mahindra also reported a weakish set of numbers. Management commentary wasn't all that great. And you had LTI Mindtree from the mid-cap IT space as well. It has lagged its peers where constant currency revenue growth is concerned, because all the other mid-cap IT firms have reported CC revenue growth somewhere around 2 to 6% or thereabouts. But LTI Mindtree has disappointed on that front. So how would you look at some of these stocks in today's session? We have a few queries on Wipro, LTI Mindtree on our YouTube feed. Ishu Singh wants to know about Wipro. Kinky wants to know about Infosys, and a few of them also want to know about LTI Mindtree. What would you advise them to do?
Okay, so let's take up Wipro first, and the Wipro setup has not been very encouraging, and well, news flows keep happening on the positive side in the IT space, but that doesn't seem to rev up the sentiment here, because considering what has happened internationally in the IT space, and that has trickled down into the domestic environment as well, it is not a good time for IT to look into. And like Mr. Bolinjkar also said, that we are also at Neotrader not recommending IT on a long side, because we don't believe that IT has got the legs enough legs to go into. So you can take it as a short-term play. So what I'm mentioning is, if you are many people, many of the viewers want to invest into IT, and I'm saying that IT is not a investment zone yet. There is continued pressure in the IT space, and every rally which we witness is witnessing a supply. So I would not look into any of the names, but the names which you have chosen, let's take a look at it. Wipro, yes, it has given a bump up, but then it is showing some bit of weakness here. It's an avoid.
Right.
As a short-term play, Infosys is showing some recovery after its disastrous drop since its numbers. Again, the gap resistance, even if it rises, the upward zone is around 1350. And then LTI, which did well ahead of its results, right? It's showing some positivity again. And here also the upward targets are around 4700. So limited rise in store. You can use it as a trading play, but not as an investing play. And if you are looking to invest, then there are a lot of avenues which are available. There are defense sector stocks which are moving. There are sugar stocks which are moving. There are FMCG stocks which are moving.
Right.
You could definitely take a look at that. And there are some select names in pharma which are doing well. That can be looked at.
Right. Since you mentioned pharma, we have a query coming in from Suresh Shankar on Dr. Reddy's, and he wants to know at what price should one buy into this counter for the long term. Pharma has recently started participating in the up move, but US FDA concerns have once again played spoil sport for the likes of Sun Pharma, Lupin, etc. But particularly when it comes to Dr. Reddy's, at what price should one look at buying into this one for the long term?
See, Dr. Reddy is such a counter that you can keep on buying this stock at every dip. So there was a good dip which had come in, and this was in the month of February. Now, what you need to do is wait for a dip to buy into, which is around 4600. That does not take away the fact that the counter is still looking good. So what you can do is you can buy some here and buy on dips. because your stop loss would be below 4,400, and you can trade it or invest it for a 6-month play towards an upward region of around 5,600 to 5,800.
Right. That's the call on Dr. Reddy's. Then let's also take up a query on Anupam Rasayan. This one is coming in from Dinesh, and he wants to know your thoughts on this counter. Now, this stock is up over 30% in the last 1 month, and it's just about a whisker away from its 52-week highs. Should you look at buying into it on dips, or do you expect, or would you advise people to get into it right now and wait for more upside?
Yes, one thing which definitely the stock has done is this stock has completely reversed the opinion which we had on this, because this was a stock which we had discussed earlier in the show as well. And the stock was not showing any kind of possible recovery. But what has happened is there has been a turnaround of the fortunes, and since February, the upward trajectory has been quite phenomenal. It has almost doubled from the February lows. And what it is going to do is it is going to set its upward trajectory further. So now the point of investing here is that you will stay invested into the stock, because the stock has got a lot of promise. And from the higher time frame as well, I see that the stock is set to move even higher. And I'm expecting a target of around 2,000 by the end of this year. And you can expect a dip also to buy into. Yes, but the dip will be a bit lower, closer to the region of around 900 will be the dip area, with a stop loss below 800.
Right. Raja, how would you look at an HUL right now, given the fact that it reported a very weakish set of numbers yesterday? The major disappointment that came in was on the volume growth front, which grew at 4% for the quarter, vis-a-vis expectations of 5 to 6%. And even Jefferies, in its note on the stock, has said that it's the volume growth that disappointed on this company, and it has lowered its EPS estimates by 1 to 2% to factor in the fourth quarter miss. But it does expect HUL to improve earnings going into the new fiscal in the later half of the new fiscal. How is it looking on the charts now? Would you advise investors to stay away from it, or is it the right time to get into it and wait for a recovery to play out?
The FMCG is a sector which attracts all the defensives, right? All the people who want to play the defensives, FMCG does attract. But then if you want to play the FMCG sector, select the stocks which are doing well. So ITC would be a better bet. Look to buy ITC. ITC has been doing extremely well. We had discussed it in the previous show. ITC continues to be on a upward trajectory. So we are not bothered about a particular counter. We are bothered about the sector. That's what is my outlook. So from the sector, choose the performers. HUL is a non-performer, and I would not select it at any point in time.
Right, that's the call on the FMCG sector. But let's take up a query on Patel Engineering. This is coming in from Ashok, and he wants to know your thoughts on this counter. Doing pretty well over the last 5 sessions. What's your advice on this one?
Yeah, this stock is on the pathway to recovery. Even the higher time frame chart suggests that this counter could go up towards its previous high. These are on 30 levels. So yes, it could take some time, and if you are invested into this counter, you could stay invested, and you could hold on for the next 6 months. The momentum seems to be good. Volume is also adding up. So yes, we can look to hold on to this counter.
Right, just about time for one more query. This one is coming in from Tariq Ahmed, and he wants to know your thoughts on HDFC Life. The stock has been on the losing front over the last 2 sessions at least. I remember it has been the top loser on the Nifty. Earnings were okayish, nothing great, nothing great to write home about. So what's the chart setup looking like for this one, HDFC Life?
Insurance sector has not really done well. And if you see over the last few months, insurance has been continuously under pressure. So I am not a buyer in insurance stocks, and the ones which are there in the F&O space, I in fact like to go short in them. So HDFC Life is a short candidate, and the resistances are around 607. So even if it goes up, it will face headwinds around 607. So I'm not a buyer in HDFC Life. And in fact, if momentum were to dip in, you would see more downside emerging in the next few days.
Right, so that's the call coming in. But with that, I think we are completely timed out when it comes to our query segment. But before I let you go, Raja, share your thoughts with what are the kind of stocks that you would be recommending for our viewers this morning?
Yeah. So considering the way the market has been displaying, right, the sentiment which the market has been displaying, I would have gone this time with two long recommendations. The first long which I would like to recommend is Canfin Homes. I would like to buy at current levels with a stop loss below 847 for a target of 875 to 885. And then I would like to buy Tata Consumer, again from the FMCG space. This stock is also showing some good recovery here at current levels, and keep a stop at 737 for a target of 767 to 777.
Right, Canfin Home and Tata Consumer, two stock recommendations coming in from Raja this morning. With that, Raja, thanks a lot for taking out time and joining us this morning and addressing all of your queries as well. Well, with that, we are completely timed out on this edition of Morning Trade. It's a Friday, so and it's a long weekend. Have a good one. But for the timing, it's a goodbye from me and the entire team that put the show together. But don't go anywhere, because coming up next is Opening Bell.
How many companies you look up?
I may look up 4, 5, 6, 7 or more. Whatever is of interest, it could be more than that. I look up. Before not coming here, I was going somewhere else. I looked up 5 balance sheets on Moneycontrol, not necessarily the company, to understand. This is in the banking space. To look at what has happened to capital, what has happened to profitability, what is happening to ROE. I was speaking somewhere else.
Yeah.
So I'll do it on the fly. This took me exactly 3 minutes, thanks to Moneycontrol. First thing to come up is Moneycontrol. So I don't even have to scroll down to look at. I click and I get what I want.